we're in a point in the market cycle, and this is why I say now is a great time to start doing this, is because transaction volume is still very low. It's still very hard to get deals done. As everybody who's active in this business is aware, the entire year of 2023 has just been tricky to do anything.
Welcome to the Multifamily Wealth Podcast. I'm your host, Axel Ragnarsson, and on this show, I dissect how seasoned multifamily investors started, built, and scaled their businesses.
What's going on, everybody? Welcome back to another quick solo episode here on the Multifamily Wealth Podcast. In this episode, I want to talk about why now is a great time to start telling your story online and building authority around yourself and your business, assuming that you haven't already started doing that. And in general, I've talked about this concept numerous times on the podcast, both on solo episodes and then with guests. But to recap why it's really important to start telling your story, and why it's important to start developing some awareness of you and your business and what you're trying to do and your investment criteria, et cetera, is because it makes everything downstream from that so much easier. And specifically, it makes two things easier. It makes it easier to find deals, and then also under that umbrella, find partners that can bring you deals. And it also helps you find investors and meet investors. And it's something that I'm very happy that I started doing a few years ago, both through Instagram and the podcast, because it's resulted in a lot of business in terms of finding deals, finding partners, identifying opportunities, and then also finding investors and building our investor base. And I think it's one of the most important things that I spend time on, doing things like the podcast, doing things like posting on Instagram, posting on LinkedIn, which is what I'm trying to do more of nowadays. And we're in a point in the market cycle, and this is why I say now is a great time to start doing this specifically, is because transaction volume is still very low. It's still very hard to get deals done. As everybody who's active in this business is aware, the entire year of 2023 has just been tricky to do anything. There's just not as many deals getting done. Brokers are leaving the business because they can't pay their bills. A lot of mortgage brokers as well, both real estate and mortgage brokers leaving the business because transaction volume is so low. A lot of investors don't know what to spend their time on, right? And a lot of them are spending time operating their assets more effectively, the ones that they already own, which is great. Everyone should be spending time doing that. But this is a great outlet in terms of let's siphon off some time on a weekly basis and start writing to an email list. Start writing a newsletter, start producing on Instagram, start writing on LinkedIn, Twitter, whatever it is. There's so many examples of this, whether it's email marketing, hosting a virtual meetup or an in-person meetup. Again, like I mentioned, starting on social. But the fundamental objective here is to start building awareness around what you're doing, right? So that when somebody has a deal or somebody's looking to invest, you're top of mind in your market and as it relates to your investment criteria and the types of assets you're looking to buy. I would like to think, and I can't be the judge of this, only other people in the market can be a judge of this, that I'm relatively top of mind for folks that are doing deals in New Hampshire. I like to think I see a good amount of those deals, right? And at least that's what I'm working towards by being active in all of these different channels. And it's easier to do that when there's less deals to work on, which is right now. And then the other reason that now it's a great time to be focusing on this is because once deals are easier to do, and there are more deals transacting and deal flow opens up, very generally speaking, for all investors, you want to be in a position to capture some of that deal flow. You don't want to be passed by everyone who's already done all of the things that I'm talking about. And again, it's the 80-20 rule. 20% of the investors in a given market are going to be doing and seeing and transacting on 80% of the deals. And it's likely in most markets that it's even the 15-85 rule, the 90-10 rule, where 10 or 15% of the investors are doing basically everything. So you want to do everything you can to put yourself in that position for when deal flow opens back up. And the other important thing to note here as well is that you're going to need money to capitalize on these opportunities. And right now, capital is very hard to raise, right? And in times where deal flow increases and the market is more turbulent, both in the way of prices coming down and operations becoming more challenging and money being less abundant in the system, basically the exact opposite of what was happening from 2018 to 2022, really from 2016 to 2022, where stock market's going up, crypto's going up, there's all this stimulus in the last few years, and money is extremely easy to find, and debt is low, and lenders are all bullish on the asset class and lending in general, and money's really easy to find. That's what pushes pricing higher. Real estate pricing is a function of the capital markets, right? But when the real estate market adjusts, and you go back and look at history, right? 2009, 10, 11, 12, money was really hard to raise and to source on the debt side, which meant pricing came down. The harder it is to find money to capitalize a real estate transaction, the more of an effect it has on the value of the underlying real estate. So we're in a high interest rate period on the debt side. Investors are not as optimistic about investing as they have been the last couple of years. It's harder to put money together to buy deals. That's an undisputed fact right now. And when that happens, there are less buyers, and that's what brings the deals. But again, when deals are easy, money's hard. That's the equation. So you want to put yourself in a position to where you are able to more predictably raise capital, more efficiently raise capital for the deals that you're pursuing. So even though that, maybe you're in a great position to source and, go under contract on a lot of great deals, are you able to go and secure the money for those deals, right? Lending's just one component. You need the equity to close deals as well. Maybe you got a bunch of money in your pocket and you don't care. But again, it never hurts to have significant access to capital. And that's really why I'm trying to become more active on social now is one, because it's an outlet, given that we're doing less deals. And two, I really want to be in a position to raise meaningful capital when the deals start to come a little bit more frequently. So my objective with this episode is to motivate some of you that are on the fence about sharing your story online. There's all kinds of other content on this podcast and just out there in general as it relates to what you should be sharing. So I'm not going to get into that in this episode. This is more just a motivational episode as it relates to doing some of those things in general. But get out there, start sending content to your email list, start posting on Instagram, start posting on LinkedIn, host a podcast, host a meetup, whatever. Start telling your story so that it makes all of these other things easier when deals are easier to find and money gets harder to find. And appreciate you all for listening. And if you haven't already, please consider leaving the podcast a rating and a review. Helps the show get noticed by more folks. And send this to somebody in your network if you think they'd enjoy it. But I'll catch you guys on the next episode.